Social Security reverses paper check phase out. What this means for you. Imagine relying on a check in your mailbox to pay rent or buy groceries, and suddenly you're told that option might disappear. That's the situation Social Security recipients faced this summer, as the agency suddenly reversed a plan that had sparked heated debate. So why all the uproar? Originally, the Social Security Administration had set out to stop mailing paper checks entirely after September 30th, aiming to save money and cut down on fraud. After all, issuing a paper check costs about 50 cents each time, while a direct deposit rings in at only 15 cents. On the surface, moving everyone to digital payments seems sensible. But here's where it gets controversial. Not everyone can easily make the leap to electronic banking. In a surprising twist, Social Security has now done a complete 180, confirming it will keep everyone sending paper checks to Americans who have no other way to receive their benefits. This last-minute switch, confirmed in a statement to the Daily Mail, covers both retirees and people with disabilities. But the agency made it clear, if you can use direct deposit, you absolutely should. We will continue to drive down paper check volume, which is less than 1% of total, a spokesperson explained. But here's the part most people miss. There are real people still deeply affected by these policies. About 600,000 Americans still get their benefits as paper checks. It may sound like a tiny slice of the total, but these recipients are often the most vulnerable. Many of them lack bank accounts or rely on alternative services like check cashing outlets. Why? Some have struggled with financial setbacks, others lost jobs, or simply never had enough to meet bank minimums. The Turvanus group is unbanked. Yet, the debate over paper versus electronic payments isn't as clear-cut as it seems. Paper checks, according to government records, are more than 16 times more likely to be lost or stolen than electronic transfers. They're also at greater risk of being sent to the wrong address or fraudulently altered. Doesn't that make electronic payments the obvious answer? Maybe, but those without access to traditional banks could find themselves cut off from vital income if checks are no longer an option. So how did this policy U-turn happen? Massachusetts Senator Elizabeth Warren stepped in, meeting with Social Security Commissioner Frank Bisignano to push for a guarantee. No one would get left behind. There are about 600,000 Americans who still receive their checks by mail. It's a small fraction, but for them, it's essential, she emphasized. Interested in making the switch? Anyone who still receives a paper check, but has access to a bank or credit union account or an approved prepaid debit card can easily sign up for direct deposit. All it takes is registering at the government's Go Direct website. And this is where things get even more urgent. Social Security's financial future looks rocky, with experts warning this week that its retirement fund could run out in just 7 years. If that happens, millions could see their annual benefits slashed by thousands. Most recently, the Nonpartisan Committee for Responsible Federal Budget, CRFB, predicted that by the end of 2032, benefits could be cut by 24%. That means a retired couple could be looking at $18,100 less per year starting in 2033. A harsh reality that no one wants to face. This situation has become even more complex after recent political decisions, including the controversial impact of President Donald Trump's so-called Big Beautiful Bill. Some experts are blaming this legislation for accelerating the depletion of Social Security and Medicare trust funds. Do you agree? So where do you stand? Should Social Security push everyone toward direct deposits for efficiency and security? Or must paper checks remain an option despite the risks and costs to protect the most vulnerable? Share your take below. Do you agree with Senator Warren's pushback? Or do you believe it's time for America to go all in on electronic payments? SSA reverses decision on paper checks. What you need to know. Imagine relying on your Social Security check to pay your bills, only to find out it's being replaced by a digital payment you're not equipped to handle. That was the reality for hundreds of thousands of Americans until now. In a surprising reversal, the Social Security Administration, SSA, has backtracked on its plan to eliminate paper checks entirely, a move that sparked both belief and debate. But here's where it gets controversial. While the SSA aims to modernize and save costs, this decision highlights a deeper divide between those who embrace digital banking and those who, for various reasons, cannot or will not make the switch. Let's dive into what this means for beneficiaries, why the SSA changed course, and the lingering questions it raises. Earlier this year, the SSA announced it would phase out paper checks by fall 2025, transitioning all payments to electronic deposits. However, after pushback from lawmakers like Senate Elizabeth Warren, DMAS, the agency has agreed to continue issuing paper checks to certain beneficiaries, particularly those who lack access to electronic payment methods. Warren emphasized that this reversal ensures vulnerable Americans, including retirees and individuals with disabilities, won't lose access to their benefits. The SSA confirmed this decision to outlets like CBS Money Watch and Kiplinger, though it mightn't immediately respond to USA Today's request for comment. But why the sudden change of heart? The SSA initially framed the move away from paper checks as a modernization effort, citing reduced costs, faster payments, and enhanced security. According to the U.S. Department of the Treasury, electronic payments save roughly 35 cents per transaction compared to paper checks, adding up to millions in annual savings for the federal government. The SSA also noted that paper checks are 16 times more likely to be lost or stolen, making electronic transfers a safer option. Yet, this plan overlooked a critical fact. Not everyone is ready or able to go digital. Here's the part most people miss. Less than 1% of Social Security beneficiaries still rely on paper checks. But with over 74 million Americans receiving Social Security or Supplemental Security Income, SSI, that small percentage translates to hundreds of thousands of individuals. According to the Federal Deposit Insurance Corporation, FDIC, 4.2% of U.S. households were unbanked in 2023, meaning they lacked a bank or credit union account. Reasons for being unbanked or underbanked vary. Some believe they don't earn enough to open an account, while others cite concerns about fees, privacy, or distrust of financial institutions. For these individuals, paper checks are a lifeline. So what's next for beneficiaries? The SSA will continue to encourage recipients to switch to electronic payments, highlighting their advantages. Beneficiaries can make the transition online through their My Social Security account, and the agency offers technical support Monday through Friday from 7:30 a.m. to 4 p.m. ET. However, the decision to preserve paper checks for those who need them raises a thought-provoking question. In the race to modernize, are we leaving the most vulnerable behind? This reversal is a win for those who rely on paper checks, but it also sparks a broader conversation about financial inclusion and the digital divide. Should the government prioritize cost savings and efficiency, or should it ensure no one is left behind? What do you think? Let us know in the comments. We'd love to hear your perspective on this contentious issue. SSA reverses course. Paper checks to continue sparingly. In a surprising turn of events, the Social Security Administration, SSA, has decided to continue issuing paper checks for benefit payments, reversing their previous plan to phase them out by September 30th, 2025. This change comes despite an executive order signed by President Trump in March to modernize payments. But here's the catch. While paper checks will still be issued in limited circumstances, the SSA is actively encouraging beneficiaries to switch to electronic payments. We will continue to drive down paper check volume, which is less than 1% of total, by proactively communicating with beneficiaries about the advantages of enrolling in e-payments and the process for doing so, the SSA told Kiplinger in an email. The SSA have been promoting direct deposit for years due to its efficiency and enhanced security. However, paper checks remain an option for those who don't have a bank account or struggle with electronic methods. Now you might be wondering, what's wrong with good old paper checks? Well, they come with significant risks. Lost, delayed, or stolen mail can leave beneficiaries vulnerable. In fact, from March 2020 to February 2021, the U.S. Postal Inspection Service received nearly 300,000 mail theft complaints, a whopping 160% increase compared to the previous year. Moreover, paper checks lack the strong creditor protections offered by direct deposit or benefit debit cards approved by the Treasury Department. Under federal law, Social Security benefits are generally protected from commercial creditors, and the Consumer Credit Protection Act, CCPA, provides robust safeguards for benefits once they hit your bank account. However, if you cash a Social Security check and deposit the funds, you lose these vital protections. This leaves your money exposed to private creditors like credit card companies, personal lenders, or medical debt collectors. So, while paper checks may feel familiar and comforting, they're not the safest option. The SSA's decision to continue issuing them sparingly strikes a balance between accommodating those who rely on traditional methods and promoting security and efficiency of electronic payments. What do you think about the SSA's move? Do you prefer the tangibility of paper checks or the security of electronic payments? Let us know in the comments below.